Hi, I'm Ali Patterson, and welcome to the Fintech Show. In today's episode of the Fintech Show, we're going to look at how payments have changed over the decades. Payments, once thought to be a slow-moving industry, we had coin, cash, and checks, is now heating up. With the digital economy moving at instant speed, we've had to change the way that we're using payments. We now have subscriptions and buy now, pay later schemes. But we can do more. To find out, we talk to payment leaders ACI Worldwide here in London, and then from my digital studio, I head to the US to speak to Varo and Spain to speak to Santander to see how to get this entire industry moving. The way that we pay, and not just in terms of the actual method, i.e. 50, 60 years ago, it's all about the check, all about the cash. Now, card, online payments, mobile payments, but the actual frequency that we pay and the invisibility around how we pay, Uber subscription models. How can ACI help banks adapt to this change on the consumer side and the consumer behavior?
So if I think about how we transact as consumers now, it's probably radically different, never mind to say 50 years ago to even 3 or 4 years ago. And I think the major thing that consumers are looking for is simplicity of use. So if I think about consumer behavior, say 10 years ago, I maybe went out and bought all my coffee using cash. I would have used credit cards in some instances and debit card in others. And ultimately, if I think about how I pay now, I really don't care. It's whatever's the easiest and simplest payment method to hand that I'm going to use. So for a company like ACI, if you think about the 4 segments we serve obviously serve our core banks where we provide issuing and faster payment capability. We've obviously got our merchant payments where we provide the merchant gateway and the fraud capability. And then we've got our corporate bill pay capabilities as well. So that gives us a somewhat unique oversight into the whole gamut of that payment ecosystem and the different players. And ultimately what that means is we recognize that it's about simplicity. So if you think about some of the things we're doing in some of the emerging markets like India, where obviously they have kind of done a massive leapfrog forward with their kind of QR code based payments and request to pay. And ACI has been kind of front and center of that, given the fact that we've historically been the largest debit processor for the Indian banks. So being able to bring those experiences into different markets and then ultimately position them and that experience in the rest of the world, such as Europe, where we can say, okay, here's what we've seen in other markets, here's how we've made it simple across the payment methods for the consumers and the merchants to be able to go out and have a reduced amount of friction, which is what everyone wants, has been a big kind of help, not to mention the fact that given the fact that we deal with a lot of tier 1 strategically important customers today, because we process $14 trillion, I think is the stat through our systems, that really gives us an insight into here's how you've historically processed maybe in an on-premise environment, here's how we can kind of shift some of that business processing into the cloud and again help ensure that you're ultimately focusing more on your business process as opposed to running the technology infrastructure, which has started to become a increasing challenge given the demand for consumers to have a faster experience in how they pay.
Do you think that the fact that we have this level of technology opens up doors for different ways that we can pay? The example, or be paid, the example I always give is 100 years ago, you work at a shop, you get paid at the end of the day, here's your cash, and then checks came along, here's your monthly paycheck, and we've almost digitized that. Do you think that now we have this seamless, instant way of paying that it can almost be done in a similar way? For example, you finish your shifts at a coffee shop rather than waiting for the end of the month to get paid or the end of the week, that it automatically pays you at the end of the shift.
I think that's the intent. So it was funny, I had a bit of a shocker a couple of weeks ago where I managed to lose 2 wallets in a week. And I think historically what would have happened is I would have phoned up all my banks and said, listen, I need to stop my cards and do that. And one of the great things that I was able to do was obviously use the app capability to freeze my accounts and still transact using my mobile phone, which meant I could still get around with my day-to-day life. And the good news is that both of those wallets did turn up. The important thing now, I think, in terms of where we are and we need to go is, whilst we've made some big advancements digitally with things like the apps, I think there is still an awful long way to go around the dispute side of the house is a massive piece. So that's, I think, a really important thing that certainly as we switch towards real time, and the future is real time, no doubt about it, that's a component that really, I think, is going to have a lot of focus, because there are still the need for reversals or refunds. So that's something I think needs to really kind of be given thought as we move forward. I think the other thing that there's been some progress, if you think about those that are underbanked, and I think, you know, everyone likes to talk about the non-banked opportunity, but there are so many people, even in you know, the UK or the US, that don't have the right access to the financial solutions that meet their needs. I think that's an area that is going to have to grow in the coming years, and you've seen it obviously with some of the welfare programs as a result of COVID, where you've seen these neo banks step in and disperse funds. So I think that whilst we are kind of on the path to making it easier to ultimately get instant real-time payments and settlements for, you know, the gig economy and everything else, I do think that there is still more work to be done, just as we mature out all of the surrounding services that probably today we take for granted in a, you know, a card world, but still need some thought as we kind of switch to this full digital experience. But nevertheless, I think COVID is going to be a big accelerator on how we think about those services.
The way that we pay is changing dramatically. More digital, more subscription based. What does this kind of cultural change in the way that people are making payments and expecting to make payments, what does that mean for models such as yourselves?
Yeah, well, it sort of validates everything that we've been saying. It's, you don't need a branch if you don't use cash. So it's really, there's not really many reasons for somebody to go to a banking branch. And so for us in the last 6 months, really, it's been sort of eye-opening that everybody else is catching up with this idea that's like, yeah, why would I need a bank that has a door that I walk through and I deposit something and where I withdraw something? The fact that everybody's moving to payless, you know, touch payments instead of cash at the moment, because they want to be safe from a health point of view, has been an interesting accelerant, right? Because a lot of people actually are avoiding touching cash, and I've noticed as soon as I got here in the UK, most people won't actually accept cash. They're like, please use contactless payments. Well, that's exactly where we are. We really encourage only contactless payments, and the idea that you provision your card into your Apple Pay or your Google Wallet and you just go and tap your phone in order to make payments is actually how this generation, you know, from their 20s to the late 30s, this is the only way that they've ever really thought of paying. And the idea of writing a check is, none of my children have ever written a check. Most of my children actually don't even know if they have a signature. I've asked them, what's your signature? They're like, I don't know, I've never used it, because they don't need one. So I think that this idea that contactless payments and the end of cash is really, that's where we are right now. And it fits right into a digital banking experience.
I want to talk about one of my favorite topics, which is challenger banks, especially comparing the challengers to the incumbents, or to use Anne Bowden from Starling's term, the heritage banks, which I like the subtle diss that's in that expression. When they first appeared, there was almost a slight, oh yes, you're going to compete with us, slight eye roll, but I think a lot of the heritage banks have woken up. When it comes to the actual kind of technology stack and that approach to technology almost culturally, do the likes of, say, Varo in the States or Starling in the UK have over the incumbents?
The obvious thing, I mean, if you speak to any of the neobanks, the thing that they'll say is that we're building it from scratch, so therefore we've got the opportunity to build everything that your incumbent bank wishes it could have, but obviously doesn't. So that's, I think, the well-worn cliche. I think if you're an incumbent bank, the thing you'll obviously turn around and say is, we've got the mass market adoption and criticality, and crucially, if you think about, you know, Varo in the US, obviously got their banking license, but I think you see more and more, not just in the US, but also in Europe, the ability to get a banking license is going to be a lot more difficult. And I think the real complexity that's going to play in the traditional bank's favour is not just the getting the license, but being able to work in the confines of ever increasing scheme changes. So I think that's something that the incumbent banks probably need to pay more attention to. But I think going back to your original point around the challenger banks, the big thing is having a DevOps kind of pipeline, because you're building it from scratch, being able to use just the solution capabilities you need when you need it, whether that's core infrastructure or whether that's some of the surrounding cloud tools that you can get, such as, you know, the data analytics or the AI. And that, I think, is the real big advantage they've got, because ultimately, as we all know from a consumer standpoint, it's about being able to interact, and nobody gets it right maybe the first time, but it's about faster iteration. And that's really the big advantage that these neobanks have got, just because they can release, you know, on an hourly basis if they want, and get that kind of customer feedback, where a lot of the incumbents are tied to being able to change the data centers and hardware availability, and, you know, all of the change control that goes with it. Just a big piece.
Equally, going back to a point you made earlier around traditional revenue streams for banking as a whole are decreasing. Interest rates at an all-time low, which means the banks have to look to diversify and think of different ways that they can bring about revenue. How does this different approach to technology, the ground and greenfield, how does that enable the neobanks, which is ironic because they haven't really kind of hit profitability yet? How does that enable them to find new revenue streams in a more efficient way?
So I think if you think back at the most logical place for people to find revenue outside of transaction fees, and I think the one thing I would kind of caveat up front is, whilst revenue fees per transaction are falling, the volume of electronic payments we're seeing ever more so off the back of COVID is obviously quite a nice boost for banks in general. But I think the obvious place that people, whether they be neobanks or traditional banks, are looking to drive revenue is improving customer experience. And the easiest way to do that is improving transaction convergence, or giving you more contextual data in order to go about your daily lives. So I think some of the challenges that the big banks or established banks will find is they've obviously got spaghetti architecture, where if you think, for example, you've got a retail account and then maybe a home insurance account, often those two pieces of data are held in different databases, which means it's very hard for incumbent banks to kind of pull together a complete data picture. Some of the advantage with the neobanks, particularly in Europe, with open banking, is they've got the ability to pull together that aggregated account information with a new architecture, because obviously they're cloud native, and they've obviously got the AI capabilities that the cloud providers provide, which helps them ultimately provide a far more seamless experience for consumers, which ultimately then helps to drive more transaction volume. That transaction volume then gives them the opportunity to provide more contextual information, which I think as consumers, what we're really looking for is the easy button. So that, I think, is going to be one of the big battlegrounds between, can the incumbents work to simplify all of their data structures, and can they as well, I think, commercialize the fact that no matter what you say about traditional banks, they are trusted by consumers to hold information. And I think, you know, the way the world is going at the moment, there's a lot more focus being put on consumer data and consumer protection. So I think that's going to be the big battleground. And who wins out? Is it the trusted bank who might have a lot of information and can't quite get it together today, but as they go towards the cloud, can use the help of the cloud providers to better aggregate that info and make it available? Or is it your neobank who's kind of jumped straight in and is going to make it so easy for you to use their product, and so easy for you to be able to aggregate all your accounts in their product, as we know from a well-known UK startup we're big fans of? Is that going to win out and get them criticality? But I think that's going to be a really interesting space in the coming years, because ultimately with transaction fees, it's a race to the bottom.
How does having cloud-based services, when it comes to things such as this use of data, this use of being able to scale, how has it enabled organizations such as yourselves to not just scale rapidly, but also do it in a secure manner, in a way that is going to keep you safe, both from keeping customers' data safe, but also that you're not going to overextend yourself?
Yeah, I think cloud is very interesting. We've come a long way with that. I mean, I've been in financial services for 25 years, and along the way, I've been at several different institutions. And one of the institutions that I was at one point was leaning in to moving into a cloud-based infrastructure, at least for some of their apps, not for everything. And it made the regulators nauseous. This idea that your data would be in this unsecured floating cloud in the sky, which is really how people thought of it for a little while. And I'd say it took almost 5 years for people to understand the cloud is more secure than we can ever be, because the amount of investment that these cloud providers can put into the security of their systems is always going to be way above what any individual bank can spend on just putting that security in place. So first of all, it gives us a lot of confidence that we have a very secure environment. Now, having said that, we've learned recently that you can get that wrong by not making sure that all of the edge points where you control the experience are not well locked down. And one of the institutions in America had a very nasty event recently and was fined as a result. And so, yes, there's a big responsibility on our part to make sure we're doing what we need to do. But as long as we are building that infrastructure, monitoring all of those endpoints and working in a cloud environment, I think that security is key to allow us to do more than we could do before. And so I actually think it opens up opportunities for us to be able to do more with our data, because we can do it in an environment that can support great innovation.
100%. I always love it when a bank says, yep, we're going to build our own data center. And I'm thinking, you're competing with the likes of AWS, and there is no way that you're going to be able to, and AWS's sole job is to be the best possible data center. Your job is to be a bank, and you're going to do what they do on the side.
That's right. Now, we will innovate in the ways that we should innovate. We will make sure that we're building IP at Varo that is appropriate for us. This is the stuff we want to be really good at and uniquely good at. Building an AWS competitor is not what we need to be good at.
How is financial infrastructure changing at the moment?
Financial infrastructure is changing a lot. We have several trends in the banking industry. One is open banking, which is dramatically changing the way we think of infrastructure. Now everything has to be open and has to be ready to interact with third parties. Back in the day, banks were closed, robust, but very solid infrastructures, but closed ones. And now we're betting on the openness of the infrastructure and the platform in order to build new services as platform as a service, banking as a service, this type of new services. So it's changing dramatically.
In regards to that, I always love to think of the way that banks used to be done was effectively a castle in terms of their technology. Everything was kind of behind high walls, and now it's much more of a forest, much more of an ecosystem. Do you think that the opening up of APIs, open banking, is one of the driving forces behind this?
Absolutely, yes, I think so. Application programming interfaces, the so-called APIs, is something every bank I know and I interact with are betting on APIs. It's a tough journey. It's not something that you can do quickly. It takes a while. Why? Because as I mentioned before, the infrastructures that we used to have are on-prem, are still on-prem. Most of the banks that I meet are 20 to 25% already cloud in this journey to cloud, and APIs is the driving force to open to the ecosystem, to interact with third parties, and these third parties can be fintechs, can be other banks, and also can be the regulators as well. So it's been a journey. I think we're traveling in this journey together, and there's plenty of opportunities.
Gotta just expand on that point there. I mean, back in the day, a lot of things used to be on-prem, and now we use the cloud quite significantly. What sort of role does that take in terms of what are, in very broad strokes, some of the massive opportunities that the cloud has enabled in terms of the way that not only is technology implemented, but the way that people as a whole think about how to access technology, how to update?
Well, when you look at cloud, people imagine something ethereal or abstract. At the end of the day, is servers. But the way you put them together, the way you use the cloud, changes dramatically, both in computing and also in storage, all the storage of data. Of course, as you're storing data, very sensitive data there in the cloud, you have to take it right. And in banking industry, you have to comply with all the regulation. The regulation is being written and ruled as we speak in terms of cloud. And there are certain systems you can take to cloud. There are other ones you have to be more careful. When it comes to client data, it's something that you have to take in consideration. But I think there's also been a convergence in terms of regulation from different regulators in the world. And there's a little bit of a consensus now that public cloud is the solution for scalability, for being also efficient in terms of costs, and for growing as the business grows. Cloud allows you to grow the business and to build new ventures in a seamless and also very secure way.
When it comes to actually migrating technology products and services from the old traditional ways into the cloud, I always find it fascinating looking at, and there's been a lot of success stories with the likes of Mox in Hong Kong or New10 with ABN AMRO in the Netherlands. And then equally, there's been also a few less successful stories like Williams and Glyn and Bow, but how banks are almost creating these speedboat banks to try new products, to try new brands, to try new technologies. Thinking of that on kind of the front end, on the back end, what's sort of the approach that the larger organizations should look to take when it comes to actually moving some of their products to the cloud?
I think the biggest challenge a lot of the traditional banks have is deciding what the right strategy is and actually committing to it. And I think the real challenge comes back to the culture of the bank. I think some of there's probably a couple of different approaches. The first approach, which is well documented, is the speedboat challenger bank. I think the challenge that approach brings is, number one, there's an awful lot of startup costs to go along with it. I think the second challenge on the back end, as you said, is it's all right building something from scratch, but how do you tie it back to all of that great data and insight that you've got in your existing bank and kind of make that frictionless experience? And then I think the third challenge is around how do you ensure from a cultural perspective you're getting the right skills in. And as we said earlier on, there's a massive shortage of technology talent, so you're really competing against your big tech and fintech for some of that best tech resource. Otherwise it's the same people with the same kind of processes but just with a different name. So I think the approach that we're really seeing working well is around a piecemeal migration approach. So picking off a specific problem area of the existing bank, putting that into the cloud, and then building off the back of that. So some of the examples we've seen that have worked really well, standing authorization. We've got a couple of very large global banks who have put their standing authorization into the cloud. And what that obviously means is their guys are getting used to kind of running it. They can optimize it, and then it gives them a proof point and benefits realization to then move more of their business processing in. So that's kind of one big use case. I think another big use case that we're seeing as well is where there are banks who are looking to start operations in new countries or in-source from third parties. Again, it's a lot easier to kind of take that approach and then think about how you would define and design a kind of very slick infrastructure. And design an infrastructure up and then kind of fit your data over the top, which ensures that you have some of the benefits of being faster to market. You can kind of build the DevOps capabilities out from scratch as opposed to trying to move your existing process and procedure across and then work out how to do the DevOps piece. So I think it's, there isn't a single size fits all. I think it's about unlocking business value, and everyone loves a success story, right? So if you can pick off a piece of capability that's causing you an issue and then actually execute against it in a timely manner, that helps kind of start the flywheel. And ultimately that's going to be the approach that I think wins out, because just migrating everything just because it's the cloud and it appears sexy without having a business strategy of, is it going to get me faster time to market, more revenue? Is it going to reduce my operating cost or my compliance cost? Unless you've got a clear business driver, you're just kind of swapping one thing for another.
Do you find that with working with this, there's often a case of this is not just going to reduce costs now, but it's going to allow us flexibility for the future as well?
Yeah, I think that's the biggest piece, right? Because I think with the changes that are going on in the payments market, where you've got the convergence of real time and card payments, you've got so much more focus on fraud and payment intelligence, because it's not necessarily about stopping the fraud, it's about ensuring that you're not incorrectly flagging good transactions as kind of fraudulent transactions and diluting the experience. And what I think a lot of banks that I speak to and intermediaries, whether they be merchants or whether they be processors, what they're really looking at doing is saying, okay, I want to have a faster speed to market. I'm acknowledging there may be more cost involved in that up front because I'm running two platforms, or I'm not kind of fully optimized when I'm deploying it in the cloud. But ultimately my major driver is to get faster time to market, increase my agility. And by doing that, my expectation is that in the short term, I'm going to get new revenue streams that I wouldn't have got. And in the long term, much like they've done in an on-premise environment, I'm then going to optimize my workloads as much as possible to ensure that my cost comes down, not to mention the big benefit of switching from a CapEx to an OpEx model.
Let's talk payments as a service. What does that actually deliver to the bank? What's the opportunity here?
So I think there's probably a couple of big opportunities for payments as a service. I think the first thing is around the fact that as banks are thinking about their transformation strategies and moving towards the cloud, there is obviously a natural pause and point for them to actually consider what do they want to offer themselves and what can they actually outsource. And I think payments as a service is, to quote another buzzword, it's very attractive purely on the basis that if you think today, banks really had two big options on running their infrastructure. They could do it themselves, and we've all seen the stats around 85% of the operating budget goes into maintaining their existing infrastructure, or you could outsource it to a processor, with the problem being that you're completely losing control on your time to market. So I think the first big advantage of payments as a service is being able to focus on your customers and then potentially outsource the technical infrastructure and running. I think the second piece and second big benefit is a lot of the banks are looking at the cloud journey and realizing that it's a very different technical skill set, which they might not have the skills in-house today to be able to execute on as quickly as they maybe want. So again, that idea that you can just consume it as and when you need it is obviously very beneficial from an operation and a maintenance standpoint, certainly on a resource perspective as well. I think the third real big benefit of payments as a service is the fact that it's the ubiquity of the payment experience. If you think about how fast the market is moving, we've obviously talked about the fact that transaction fees are dropping. Banks are looking for different revenue streams. One of the big kind of challenges is how do you respond to those changing needs in a effective time period? And I think payments as a service is a really neat solution for that, because it just allows you to unlock the new capability as you need it, and ultimately again not worry about, oh my gosh, have I done the right market analysis? Can I actually build a business case and get it built in the next 6, 12, 18 months, only to find was I actually right, or has the market moved on? So I think that ability to kind of unlock the payment capability as you need it by using APIs is massively powerful, because it transforms your go-to-market and your customer experience, and not to mention your cost base, as we've talked about as well. So there's some of the big benefits.
That's all we've got time for, but the payments industry is not going to rest. As always, you can catch the rest of the series and more at fintechf.com.